Welcome to my channel CA Gayatri's Academy, and today we are going to deal with the very important topic, which is fraud red flags. What are fraud red flags? We have to know, which will help us to attempt the audit paper as well as in real world of auditing. It will help us. So fraud does not start with big scam. It starts with the small signals, and if we miss those signals, then we will actually not be able to perform the audit perfectly, as well as in exams also we will lose marks. So today let us decode the fraud red flags. Okay. As per auditing standards, especially SC 240 on fraud, right? The auditor is responsible to identify and assess fraud risks. But remember, the auditor is not responsible to identify and assess fraud risk. He does not give any guarantee for fraud detection, but must identify the red flags, which are warning signals. So what are the fraud red flags? For that we have to know first. Red flags are unusual patterns, inconsistencies, or suspicious situations that indicate possible fraud, but they do not prove the fraud, but they demand investigations. These are the fraud red flags. There are some major red flags, fraud red flags. Let us do one by one. First is the accounting red flags. Okay. For example, we can say sudden increase in revenue at the year end, but no corresponding cash flow. This indicates possible fictitious sales or window dressing. Another case we can take, that is frequent changes in accounting policies. This indicates possible manipulation of profits. Okay. So in the examination, if this type of question comes, there is a change in the accounting policies, then we have to say there is indicates risk of material misstatements due to fraud. Number two, we can say internal control weaknesses. Internal control weaknesses, weak controls equals easy fraud. If the control is weak, then the fraud may creep in very easily. If, for example, the same person handles cash, he does the recording and also the bank reconciliations, there is no segregation of duties, which means high fraud risk is there. Okay, so we can say lack of maker checker system. Audit point of view, test of controls must be increased. From audit point of view, we have to see that the test of controls to be increased so that the fraud does not creep into the work. Number three, we can say management behavior red flags. So very important this point for us, because management refuses to provide information. Unnecessary pressure on auditor is there, and dominant CEO overrides controls. This indicates possible management fraud. Okay. Management delays providing confirmations. So from auditor's point of view, professional skepticism has to be increased from the start of the audit work to the end, so that he can understand where the fraud is and what steps have to be taken, how to increase the control system so as to increase the detection of fraud, right? So management override of control, we have to keep a note on it. Then number four, transactions based red flags. What are these? Suspicious transactions. Examples: related party transactions not disclosed, unusual journal entries at odd hours, large round figure transactions. Okay, this indicates possible concealment or manipulation. Okay, so unusual year-end adjustments without explanation. Okay, so what should be the action of the auditor? Perform detailed substantive procedures. The auditor should perform detailed substantive procedures in order to detect the frauds. Number five, you can say financial and operational red flags. What are these? Continuous losses but high bonuses paid. There is losses in the company and it is continuing for a long time, but bonuses are paid high. Negative cash flows but rising profits. Right, profits are rising of the company, but there is negative cash flows. Then inventory growing but sales declining. Then there is no sales, but the inventory is always growing. This indicates possible misstatement or fraud. Okay. To just for your exam point of view, structure your answer in way. First, identify the red flag. Second, explain why suspicion arose into linked to fraud risk. Then give the audit response what you should give. Okay. Example format: sudden increase in year-end sales indicate possible fictitious revenue recognition. This creates risk of overstatement of revenue. Auditor should perform cut-off testing and verify supporting documents continuously and in a vigilant manner. Okay. Then we should also just see, for examination point of view, let us do some case studies to understand the red flags more better way. Okay, revenue manipulation. Okay, for example, XYZ Limited is a listed company. Okay, during the audit, you observe a significant increase in the sales in the last month, that is in the month of March. Many sales invoices raised on the last day of the year. No corresponding increase in cash collections. Management is reluctant to providing supporting documents. What should you write? First, identification of the red flags. Unusual spike. What are the red flags here? Unusual spike in the year end sales means possible cut off manipulation, right? Lack of cash inflow means possible fictitious revenue. Reluctance of management indicates management override of control. Then second case we take fraud risk inference. These conditions indicate risk of material misstatement due to fraud. Particularly overstatement of revenue and window dressing is there. Third, auditor response as per SA 240 has to be given. Apply professional skepticism from the starting of the audit to the end. Perform cut-off testing. Verify supporting documents like invoices and dispatch records. Okay. In this way, you can reach to a position to get good marks, as well as your audit will be done in a real world. Okay. Obtain external confirmation wherever possible. Review journal entries, especially at the year end. Conclusions, you can say high fraud risk exists. Auditor must perform extended substantive procedures. Okay. Case number 2, internal control weaknesses. If there is internal control weakness in a company, then there are chances of red flags. Okay. In ABC Limited, the case, you find that one employee handles cash receipts, recording and bank reconciliation. There are delays in depositing the cash into the bank. Differences exist between the cash book and the bank statements. So what should be your answers? First, red flags identified. What are the red flags? Lack of segregation of duties, first. Second, delay in bank deposits, that is also red flag. Third, reconciliation differences. Okay. Then fraud risk. High risk of cash misappropriation is there. Weak internal control enable fraud. Audit procedures, what are the procedures which you have to perform? Perform surprise cash counts. Okay. Then verify bank reconciliations. Trace cash receipts. Okay. Trace the cash receipts to bank deposits. Strengthen the test of controls, because if the test of controls is increased, then the audit procedure will be perfect to find out auditing the frauds. In conclusion, you have to write indicates control failure and increased detection risk. Okay. Then case 3, we can say related party transactions. During audit of PQR Limited, you observe significant transactions with related parties. These transactions are not disclosed in financial statements. Pricing appears unusual. Okay. What your answer should be? Okay. First, you said what are the red flags? Identify them. First, non-disclosure of related party transaction, that is the first red flag. Second, unusual price, right? Fraud risk, possible concealment of material information, risk of fraudulent financial reporting. Auditor responsibilities are now identify the related parties first. What will the auditor do first? Identify the related parties. Verify transactions and pricing. Ensure proper disclosure is there. Report non-compliance. Okay. In conclusion, you can say that violation of disclosure norms. What are these? Right? Violation of the disclosure norms. Disclosure has not been done perfectly, and material misstatement risk is there in this type of cases. Okay. These are the cases for red flags cases where you have to deal in this way. First, you identify the red flags, then what are the procedures as an auditor you have to take, then you conclude. Okay. Case study 4, financial inconsistencies is there. For example, a company reports continuous growth in profits but negative operating cash flows and increasing inventory levels despite the declining sales. So what your answer should be? First, to identify the red flags. What are they? Profit without cash flows, inventory build up without failing sales. Sales is not there. If sales is not there, then what are you doing with the inventory? Inventory is required when the sales rises, right? To build up the manufacture of the products, but the inventory is rising, but there is falling sales. Fraud risk is there. Possible revenue inflation. Okay. Possible inventory overstatement. Audit response. What should be the response of the auditor? Perform analytical procedures. Verify inventory valuation. Check revenue reconciliation policies. sorry check the revenue recognition policies, how to recognize policies, what are policies are followed, whether they are in continuously followed that. Review working capital changes. In conclusion, you can say strong indications of financial statement manipulation. So these are the way how you have to find out the red flags and how to deal, what are the audit procedures. So first step should be to identify the red flags. Second, what the auditor's procedures should be, and what should be the conclusion. Okay, so always follow this. Identify the red flags, link to fraud risk. What is the fraud risk? Then quote SA 240, that SA 240 deals with the fraud, and give audit procedures to be performed by the auditor. You as an auditor, what the steps you will be taking, that you have to give, and then conclude clearly. Okay, such conditions indicate risk of material misstatements due to fraud. Okay, this requires auditor to exercise professional skepticism from starting of the audit work to the end. Okay, and perform additional audit procedures as per SA 240. So remember, fraud is hidden in small signals. If you can identify red flags, you think like an auditor, and you write the answers in a way so that you can get and score more marks. Thank you.